I think to achieve truly outsized returns, you need to have an ambitious vision, a large market, and a world-class team. Aqua Digital Rising tick all those boxes. So I'd like to invite Yasin, Andreas, and Mark to tell you a little bit more about how they're reimagining people as investable assets and what this means for investors. Over to you guys.
Yes, thank you. Hi, I'm Yasin, founder and head of strategy at Aqua. Aqua is a very unique investment opportunity. It's about a technology that will launch a completely new asset class. We're enabling people to invest in human beings. Now, I won't bore you with a long explanation. We have a video that is much better in explaining what Aqua can do, but as an investor, you want to know whether we can achieve our claims and make money for you. And I'm pleased to say that the founders all had very successful careers. Prior to Aqua, I founded, built, ran, and IPO'd a global investment bank, licensed in Germany as the CEO for more than 10 years, which I sold to a group of hedge funds in 2015. Straight after that, I've built a fintech company, naga.com, some of you might know it, which I also started as the CEO, took it public within less than 2 years with a market cap of more than 100 million euros. And I believe from all my experience, Aqua is so far the most exciting business I've ever been involved with. And so let me introduce you to my other founding partners. Firstly, our CEO, Andreas Rüther.
Yeah, good evening. Like Yasin, my background is with fintech and trading companies. I'm over 25 years experience, and I can say I've never come across an opportunity as exciting as Aqua is. I have run asset management firms, brokerage companies in the EU and abroad, and yet nothing as innovative and with so much potential as Aqua. My professional background is law, and together with members of the Aqua team, I have successfully completed 4 IPOs in the past 15 years and produced substantial value. My focus at Aqua is on the organization of the corporate structure to create an efficient, profitable, and technology-driven company. We already have put together an experienced and successful team, and we are on track to roll out a product in January next year. Aqua's combination of big data analytics and artificial intelligence combined with cutting-edge technology in financial services, HR, and sports analytics represents the greatest innovation in retail brokerage in the last 20 years. Before I play the video, I would like to hand over to Mark, our COO.
Thanks, Andreas. Yes, good evening, everyone. So my background, similar to Andreas, was in fact law, but over the last 20 years, I've been lucky enough to be involved in some of the most successful and interesting fintech and financial services firms. So in 2001, I joined CMC Markets. I think I was their 35th employee, leaving 10 years later as their group director of distribution of a business that had recently been invested in by Goldman Sachs, valuing us at 1.2 billion sterling and 1,000 employees. I then spent time in the Middle East in Abu Dhabi. I was the global head of sales for ADS Securities. I had my family located in the region. And we went from a 0 volume brokerage to when I joined to actually one of the largest volume traders in the entire region. Now, I've also worked with Andreas and Yasin before on Naga, which, as Yasin mentioned, a very successful and rapidly growing brokerage house. Now, my background and my focus has always been in developing global support and distribution hubs for financial assets and data. I'll be using this experience to drive the worldwide expansion and growth of Aqua, its exciting and unique product offering amongst the investment community from our launch, as Andreas said, in January 2021.
Tonight, I did not want to take too much of your time when it comes to PowerPoint slides. You can visit the corporate presentation on the Eureeca webpage. I'm talking about the entire corporate presentation, of course, a few slides more. However, I want you to focus your attention as an investor on 3 particular slides. The slide 1 is that we have speaking about indices. Yasin mentioned that just before, but we did it in theory. The slide number 1 shows you a little bit of what you can expect. This is an index of the holistic value of Lionel Messi, for instance, and it shows the period of several years. It's going up and down like the Dow Jones or the US dollar against the euro. and what is remarkable, you as an investor and a sport enthusiast, and of course a sports expert, you can go long or short on our Aqua indices on celebrities. And this is exactly how it looks. So it is pretty much what you know. Yes, I mentioned it before, the S&P, the Dow Jones, the Euro dollar, that's up, down, and every tick you can go long or short based on your knowledge or expectation on the market. The second slide gives you an idea about our strategic approach. Thanks a lot. Our artificial intelligence pricing engine calculates data points. These are the raw material for the index that I've been showing before. The line between the points is the index graph. We index football, cricket, US sports, teams like Manchester United, Real Madrid, Juventus, or Bayern Munich, and we are absolutely sure to attract a huge audience. We also index the peer group of famous players. Cristiano Ronaldo, Lionel Messi, Neymar, Luka Modric, or Mo Salah will be displayed using Aqua's own data. That is absolutely new, and we are sure that you haven't seen it before. And please bear in mind that as opposed to the binary approach of the whole sports betting industry, we have a continuous holistic value of the people that I just showed. Number 3, slide number 3, if you kindly move on one forward, thank you, is what you can expect as our investor in the next 2 years. There will be exciting years. Currently, we are raising early 21, as Mark said before, we go live with football, cricket, and esports. Esports is maybe one of the most exciting markets for the young generation. In 2021, we will be adding more sports, celebrities, politicians, and influencers to the Aqua Index universe. In 2022, 2 years from now, we will shift gear again and start preparing our IPO, or our liquidity event, can be a SPAC transaction or merger, which we expect in about Q3 or Q4 2022. So what's in for you? Based on our current expectation, we expect a return for our Eureeca investors. Yes, we will, and you will soon know. Let me finish here and maybe listen to my partner Yasin again. He has some exciting background information and outlook, a little bit on DEF and what we are planning. Yasin, please.
Yeah, maybe just, Stephen, do you want to show the UX video quickly, if that works? Let's give it a shot so you see the product in action, because we didn't have sound previously. And if that doesn't work, we go through the video. But in the meantime, while this is running,
here we go.
We go for the sound and let's see if that works. Very good.
The Aqua platform brings you tradable indices based on real people. Use your knowledge of sports players, teams, celebrities, and influencers to decide whether they are gaining or losing value. Each person is listed as an alternative asset, a recognized financial instrument. You buy a derivative product with a tradable value linked to the performance or individual. Top players and teams in football, cricket, and esports. Buy or sell financial contracts on players or teams. Add players to your watch list. Unique, high-quality news feeds and sentiment analysis keeps you informed. AI analytics assist in your decision-making process. Buy and sell notifications on each of the assets. Search players or teams using names or our special shortcodes. Detailed analytics, news, performance, social media, and trading information is available. You analyze the person and decide, as you do with other CFD contracts, whether this is a good investment, short or long. Buy and sell players in real time. Take advantage of rises and falls in the market. Click the buy button. Enter the number of contracts you want and confirm. Use your dashboard to monitor your portfolio in real time. Open orders. Maintain your watch list. Keep track of profit and loss. Look at historical and current performance. Deposit funds using global payment methods and withdraw money back to your bank account or digital wallet in just a few clicks. Trade on the go with the mobile app, intuitive and sleek. It ensures you never miss the action and can keep trading wherever you are. Fast and easy. Aqua, invest in human success.
Yes, wonderful. Thank you, Stephen. Just quickly on our fourth founding partner, Dave, who can't be here this evening. Dave is an Oxford graduated computer scientist and mathematician. The whole index development, he performed that previously, as you saw him on the first video, for Barclays Investment Bank, where he was part of the lead team that developed indices for companies like BlackRock, Vanguard, and the likes. And that engine that Dave built has been sold to Bloomberg for $1 billion. And Aqua is building on exactly this technical brilliance alongside with the distribution from Mark and the management experience from ourselves. And we are building EU regulation compliant indices. So these indices in terms of regulations are exactly like a DAX or a Dow Jones or a NASDAQ index. And they're audited by one of the big four companies. If you think of Aqua, think of Google tells you who, what, when, where, and how, whereas Aqua tells you exactly how much, gives you a historical price chart of the performance and makes it an investable index and financial product. And we are also backed by one of the top tier global venture capital firms, Elevate3, which is headed by Christian Angermeyer, our cornerstone investor. He just IPO'd one of his portfolio companies, Compass Pathways, at a valuation of $2 billion. So very strong backing on that side. Now, in our previous businesses, we quickly achieved, like especially in Naga, less than 2 years, a 20 million revenue run rate. And given that the uniqueness of the product, we expect the same here, but with a valuation multiple of a big data firm of 20. That means we're looking in 2 years at a 20 million revenue at a 20 multiplicator, which leads to a 400 million valuation, which is a factor of 20 return on the investment that we're targeting to achieve here, which we also managed to do with, especially my previous two businesses, the investment bank Varangold I started, as well as the fintech Naga. But yeah, now thank you for listening, and we'd like to hear from you and are happy to answer your questions.
Thank you, Yasin, and thank you, Mark and Andreas as well. So we do have some questions. Let's dive into them.
Okay,
So,
wonderful.
First one is, would you have any understanding or agreement with the individuals that are traded on the site? So in the absence of any agreement with that individual, surely that individual would not allow you to use the name or brand on your site.
Now, it's basically just like a newspaper reporting on a name. If the Daily Mail, the Mirror, or the Gulf News gives you reports that Ronaldo scored 3 goals and he played mediocre, we would put that in a number. So we're just reporting on public data. You could actually gather all the data yourself. It just takes you 48 hours for every point. Now we do all of that in real time. So just like the media doesn't require to report on a person of public interest, except for very few examples where they have their names protected, like David Beckham, there's a handful where we have to use our own ISIN code or number, which then refers to their wiki page. So that is all sorted, especially given the legal background of the team.
Perfect. So I'm going to group together 2 questions here because they're on the same theme. So what happens if the celebrity in whom I invest dies or retires? What would happen to my investment?
We would halt the trading. We would do exactly the same which happened before in terms of other events that happened and affected the stock exchanges. We will halt the trading with the moment where this event happens. We would stop engaging into new positions, and we would calculate all open position and all activities at the point which was last defined as that individual, that human, was alive. So there is almost no chance to cheat on that particular event, and there is no front running on that one. So the person who would know before others of this event would not have any commercial advantage.
Understood. How does this business differentiate itself from Football Index?
So Football Index is a UK focused entity that is actually a gambling business. Aqua, these indices that we actually, so first of all, Aqua creates these indices. These indices will actually be distributed by regulated brokers independent of Aqua. So it is, first of all, an alternative asset, which is a recognized financial instrument. So that's the first key element. Our product is not just on football, but it covers celebrity, esports, Hollywood, Bollywood, politicians, captains of commerce as well. So our depth of product is much, much larger. We have the ability of leverage as well. So our product, for example, a $1 deposit would give you $10 worth of exposure on the market because, for example, such as a CFD offers. So our product is much broader, much larger than that of Football Index. And Football Index, I said, is a gambling license product that is solely based in the UK. And those instruments also that Football Index offers is based on a peer-to-peer market. So it's purely based on matching buyers and sellers. There's no algorithmic price engine basically actually valuing that human's performance, which is key to the center of what Aqua and what we are doing.
Think of it
I think
purely supply demand driven, just like the cryptocurrencies, and hence very vulnerable to pump and dump and manipulation. Whereas with us, they're core fundamentals, because at some point, somebody paid 20 million for Ronaldo and then 80 million, and we having core proper fundamentals on everyone. That's, I think, another core differentiator. They're not creating an index, they're just displaying supply demand figures, which can be manipulated.
So I think that actually answers the next question, which was essentially asking the difference between gambling and what you guys are doing. So is it, would you agree, is it the algorithm that is the primary differentiator? And
we provide editorial content. We provide mathematical content, AI driven, about the holistic value, the continuous holistic value. There is not much gambling inside. I mean, you can use it to support your own decision if you intend to do that. But what Yasin just said, there was at one stage Lionel Messi had a value of 20 million and then he had a value of 300 million years later. And we tell you exactly what happened in between. What was the price at the 22nd of June in 3 years back or 4 years back? This is editorial content. We grab the data from other sources and calculate them to the data points. So it has nothing to do with gambling, but of course, as we say, as a big data firm, we provide these data and you can make use in different means of these data. And it can eventually support your decision if you think to bet on a certain game.
Okay. And I think the, so two questions that follow on from this. I'm going to read them both out because I think you can answer them in one, and I think you have answered them. So how do you determine the intrinsic value of an individual's index? Is it purely based on investor demand and supply for the index product? So I think you've covered that. And what are the core fundamentals that drive these pricing algorithms?
Yeah, and maybe on that particular part, we have 4 basic pillars, and I relate to an example in football. And of course, as Mark said, we have different verticals, we have celebrities, we even planning for Asia to do TikTok stars, right? So it's very, very broad, because you necessarily won't have an opinion on Vodafone's next year's quarter results, but you would definitely have one on your most favorite celebrity. We follow people. So 4 pillars on a soccer player. Let's take Ronaldo. There is, first of all, the real transfer value and the sponsoring contracts. Those are hard economic facts, but they don't happen too often. We take those. The second pillar is his performance on the pitch, which is how many games he wins, the goals he scores, ball possession, all the statistics you would have on FIFA, which brings us to a vertical esports, which is also very popular, we're working on. The third pillar would be a semantic analysis of the media sentiment. The popularity on the general mainstream media has high impact. We are harnessing this data, organizing, normalizing it. And as a fourth pillar, we have the social media, the likes, the shares, the comments, the tweets, the retweets. And if something happens, even if somebody beats up his wife, that has a ripple effect through these. So our model also has predictive value, not only investable value. And actually, for the further development, our venture capital firm sees the financial markets as the low-hanging fruits, but later on for the IPO, they see different verticals like going into other areas like human resources, recruiting, where you can also score the performance. Whenever it comes to performance of a human being, it's mostly subjective. We put a numeric value to it. And from those 4 categories, using about 500 data points per individual on a continuous real-time basis. That's what we're computing.
Okay. And so again, just following on from that theme, we have a question on, okay, if you're picking this up from editorial data, is there a potential for manipulation through active social media and paid posts? So somebody going on and actively manipulating this?
Of course. We obviously had this, and the manipulation factor comes in when you go to things like media sentiment. If you do analysis raw without having a sentiment and double check, you would have had Jeffrey Epstein as the most successful entrepreneur last year, which actually wasn't the case. But given the amount of data points, we also go for cross consistency and obviously have the same elements of fake news checks like all the other media. But on top of that, there's a consistency, if you think of financial markets, a filter for so-called bad ticks and negative outliers, which tries to identify. We're not 100% protected. However, the impact of a single data source will never have impact on the Nike sponsoring contract or how many goals he scores. So there are always hard fundamentals that are far less vulnerable to manipulation. If somebody puts in $50 million to get Ronaldo more followers, then obviously he has more followers, which then in return enhances his real economic value because he would have them. But you would need to invest. It's as difficult to manipulate the stock market by trying to buy more Porsche cars in order to bring up the stock. You can do that if you have enough money, but same mechanics here. And also the European financial regulatory regime applies on the trading and insider trading. So it's not an unregulated space. Even though we're doing something completely revolutionary that has never been done, we already obey to the exact regulations as if we were a financial institution. As you see my two partners to my left and right, Mark and Andreas, who have a law background, and myself, who run a bank, we're very compliance-minded here and are actually assuming that this part will experience regulation down the road in the future, which is good for us because we're kind of heading this development here.
Okay. And so
may I add one detail? Do you allow me one detail? Just put it in comparison. What Yasin just said, absolutely 100% agree. And just imagine to the gentleman or the lady who asked the question, well, how is it in other areas of the commerce? How is the impact of that potential manipulation? You would manipulate one data point and not sustainably, because we are displaying the continuous holistic value. So there would be maybe an uptick or so, but very shortly it would go down again, or you would have to put enormous efforts in that manipulation. Whereas the same much smaller impact, a much smaller investment into manipulation would have in binary events a full changing effort. You would win instead of lose. You would lose instead of win. So in that investment world, that particular tick manipulation or the try to do so has a very, very little impact. I just wanted to add that. It doesn't change the answer at all, but bearing in mind that might make it a bit clearer.
Indeed. Okay, so diving into the sort of slightly more technical side of it, how do you calculate the bid-ask spreads between celebrities? For celebrities. Yeah. So how do you calculate that spread? I mean, maybe Mark, I guess you can give us an idea.
Yeah, shall I? So basically what we do is we start off with a fundamental point. So a point, call it $10. Okay, so everyone starts off at a point. We then basically back test the data over a period of time, a significant period of time, which then creates basically a value once we go live. So everyone almost starts off at the same point, and then calculating these multiple data points, it creates their price in real time. And at that point, you then have a live price of $10.20 at $10.30, the bid-ask price, and then that is continually updating as the data points pick up new information, whether that's a goal score, new likes, a media sentiment, a new sports contract, etc.
Yeah, one point to add, as we are the data firm, like Bloomberg or Reuters, supplying the data to the financial brokerage firms, the financial trading houses, the online brokers and trading firms can determine their own spread. And that spread is usually balanced and also has to be compliant with the EU regulations in terms of best execution. But one thing that is very important, that the entire trading industry suffers from very low margins. Everyone that trades knows that there's a 1 pip spread. Now with us, in all the tests and also football index, there is a spread of 5%. So for the first time, probably in 20 years, we are relieving an entire industry from that huge margin pressure. So it's highly profitable. Spreads and commissions are between 2 to 5% because nobody cares if they buy Ronaldo 120 to 122 because we are making the market. It's basically like Bitcoin in 2011 or 12 when you traded it. So we are solving talking about the spread. one of the big problems, and this is the reason why already 5 brokerage firms are kind of in a pre-onboarding process. One large brokerage firm, which I can mention here, Fullerton Markets in Singapore, is also even an investor, the owner himself, because he wants to take it online, because it solves one of the most pressing problems the industry has: low spreads, extreme competition. Imagine you have a product without any competition out there. You determine the spread, and a position on Ronaldo, 2% spread, sounds at the moment as very, very acceptable. On Football Index, people pay up to 5% on binary events. So the spread here is generically, mathematically around that core price, but the broker has the last say, but has to basically comply with the regulations in the applicable jurisdictions, EU or US or whatever that may be. We are using these brokers as carriers, just like basically PayPal used eBay as an hub to piggyback on that exposure they already have, which is very important. So we're going into a market that already has customers, clients with demand. And as said, your favorite celebrity is far more relatable than Microsoft's next quarter results. That's what we're basically playing on here.
Okay. And a slight change of theme here in the question. So, okay, so it's a trivial question, but the name Aqua doesn't seem to match the underlying business. I wouldn't have realized what you did if I hadn't watched this webinar. Why did you choose the name Aqua?
It was a discussion. It is short, it is flowing, it's the substance of life of everything. We are 70% water, and the source of every economic success is ultimately a human being. It starts with a human being. You invest in Elon Musk if you invest in Tesla, and that was kind of Aqua, the source of life. So the source of any value is life, human life, and that's what we're making investable, so to speak.
Makes sense. Makes a lot of sense. Okay, so valuation. How did you get to your current valuation?
Yes, basically we are from day one designed to go public as a company. We all have several IPOs on our track records, and the initial valuation is based on the projection, based on a feasibility that we have performed already with the brokers, the volumes we are projected to do in terms of trading. That brings us to the current valuation, and follows a traditional discounted cash flow model. We see this investment as, and I'm very open here, this one is not going to remain of a factor 2 or 3, 4. It'll either stay dormant or generate you X20 like it did with the fintech Naga, where I basically created Instagram for trading together with Mark and Andreas, which now is a $150 million company trading in Germany. So it is kind of a play that is more on the side for the real high return seekers, and not so much a business where you would see 5 or 10% growth a year. It's 3 digits, and that is factored in the projections, which are supported obviously by the commitments of distribution partners that we already have. On that note, we're already having offices, distribution points in Shanghai with Pete Neston, our team member, Vishal Kapoor in New Delhi. We got Mark, who's moving now, especially in DIFC. We're approved by the DIFC financial hub. So we're going to be located physically in Dubai, as well as London, companies London-based limited. And we also have us in Europe, Andreas in Germany, and Javier in Latin America. But having said that, the target market is obviously Nasdaq to go public on. But this distribution network, the commitments together lead to a discounted cash flow calculation, which then very simply, according to the financial markets mechanics, lead to that. Very important to note is that a big data analytics business gets a factor of 20 on their turnover. So we do 2 million of revenues of turnovers. We're worth about 40 million at listing. We do 10 million, we're worth 200 million. We do 20 million revenue, which again, we managed a couple of times in our previous businesses, whether it was Mark or Andreas or myself. 20 million brings us to a 400 million valuation. You discount that, go back, take the risk factors off, and there you are at the around 18.6 million euros that we have at the moment.
And is it, so another question on the financial side, is it feasible to go for IPO in 1 year for a startup?
And not 1 year. We are aiming for 2 years. I did an IPO in Germany within 21 months. It was a record time thing. It is a matter of preparation. We don't plan to raise another 3 rounds in between. If strategic investors come in, yes, there could be some dilution, but our core intention is we raised about 3 million right now, more than 3 million, which should bring us to break even conservatively. And from there on, we think it's very realistic. And there's also ways to go public, especially in NASDAQ, via a so-called SPAC, reverse IPO. But we've done a proper IPO in Germany, one of the most conservative and rigid markets that exists on this planet. So with this one, we're very, very confident, actually already in discussions with friends that have accompanied IPOs of our companies in the past.
Perfect. So, okay, what is your current cash burn and how much money have you raised to date?
Yeah. Mark, do you want to?
Yep, so we are raising $1 million via the Eureeca platform. We have raised 847, I believe, to date, Sid. I believe that's the number.
Right.
We have raised in total 3 million across all our avenues, and we are looking to raise circa 3.5 million, which we already have commitments for. So very exciting. The cash burn, that 3.5 million will take us up to the IPO in 2 years, basically. And we look to start generating revenue realistically, break even within 11 months of launch, which will be late Q1 2021.
Just to clarify,
Okay.
3.5 target, out of which 3 million are already raised. So there's a 500,000 gap. Okay.
And that covers sort of the first half of the next question, which says 1 million is a modest amount. So I guess you've covered that. And then it says, how much has been invested by the founders to date? So I don't know if you want to answer that or take that offline, or it's up to you.
It's approximately 1 million, because especially Dave has been working on that almost since 2 years, and there has been a development team obviously to bring it forward to the back testing, etc.
Okay. How many, Mark, this is probably one for you. How many brokers do you have ready for the kickoff in Q1 2021?
Okay, so we will, at the moment, we are in depth conversations with 5. We have 2 that are ready to go and a 3rd that we will bring on board. You know, quite candidly, we will, I'm in contact with 20 of the largest brokers. If people are familiar with the brokerage market, this is the large MT4 brokers, the global players. It will give us a turnkey access to probably a circa 500,000 client base globally, with a core focus on Asia, as you can imagine, who have particular interest in these markets. So we will look to go live with, in Q1, I would imagine 2 to 3, and I would expect by the end of year 1 to have probably around 15, 20 on board. And the great thing about this model is the B2B2C model is it doesn't incur the huge cost of the B2C model from a branding and an onboarding perspective. So yes, while there's revenue shares for the data that we provide with the brokers, which of course is our model, we have a turnkey access to both geographical and multiple client spread. And what is key is that all of these brokers are very, very excited by this product. As we've said before, the actual development in the online brokerage world over the last 20 years has been minimal. Main driver has been regulation. So to come to a product that has both understanding and people intuitively want to trade and have a passionate take for, we actually think that this is going to be a very interesting and a very fast moving and fast developing market.
And I know you guys did a sort of a quick touch on all your backgrounds to start with, but Mark, in terms of brokerage distribution, might be worth you just reiterating what you did.
Yeah, so my background, I was the group director of distribution at CMC Markets, and I basically started a B2B business on my own, a man and his dog. I was that dog in 2003, and by 2008 I was generating over $50 million of revenue a year off 3.5 million direct costs. So a very, very profitable business. How did I do that? I did that by developing relationships with leading banks and brokers globally. I would spend majority of my life, I think I worked out, I spent 1 out of every 20 minutes of my life on an aeroplane, building networks, building relationships. And through that, you build credibility. And it's been very, I'll be honest, very easy for me to have those relationships, to present our products and actually move very quickly. So this model over the next 12 months has been the most exciting one that I've seen. And I personally looking forward to substantial growth and substantial uptake that the investors who are with us today will see, not through the brand of Aqua, but will see through the brand of who they trade with.
Perfect. And okay, Andreas, I guess this is for you. So we've gone back to the investors asking a question about what happens if a celebrity dies or retires. So there's a follow-up question here saying, what after you hold the trade, what happens next? Will the investor get their money back, or is there an insurance there, or how does it work?
No, we would have a look at the trades, that all the trades are registered, and we define the moment where that event has happened that has halted the trading, and we will give back all the money from the trades afterwards that happened afterwards. They will all be cancelled out, which is a fixed procedure in the brokerage industry, and all those trades who were on the moment around, they were calculated at the last price where it is defined where the individual has been alive. So it's basically a money back or a straight cancel method, and not an insurance-based model that we drive. But that is basically industry standard, and this is kind of a derivative question, because we deliver the data and those brokers have, of course, their own procedures. Just Mark explained a little bit on B2B2C model. If one of the investors asking this have an account with their broker, it makes sense to look in the procedures of handling an arrow trade. This is where they can find the description of their procedure.
So we have a couple of questions about the technical team and the reliability of the AI, how accurate will it be? So I guess probably the easiest way to explain this, so I know you've talked about the algorithm, maybe you could talk a bit about Dave and his background. I know you have touched on it briefly.
Sure. Yeah, Dave, as I mentioned, is an Oxford graduated computer scientist and mathematician. We not only hired him, but also his co-partner, Mark McKay. Now, they were responsible for running this engine at Barclays Bank, creating it. And it's still in use by Bloomberg. But just that engine for traditional assets, to give you an imagination about the value, has been sold for $1 billion to Bloomberg. It's public. Actually, we have a data room. You can request access and see in his CV, there's all the links in there. Now, Dave hired a team which consists of the two lead engineers, which were at Barclays. Dave is the largest shareholder also. We are the economic people, but he's the brain with the technical part. We have machine learning PhDs in the team. So it's very robust, and it actually builds on that foundation. So it's not the first time he built it. He's just adopting something that is very reliable, that has proof of concept from Barclays Investment Bank to Bloomberg, which is now applied to a more emotional, relatable context with just different data sources. So for him, it's a repeat science. There is the key person, which is covered by Mark McKay, who's on the team, and then obviously there is the other developers that we have. On that note, the user experience that you saw, we hired the two UX lead members from Robinhood. I don't know if you know the brokerage company in the US, which is valued at like 8 billion plus. And so in that sense, we are very, very confident on the stability of this product as years and years have gone back in the past in this, and it's a repeat exercise for him with new data points.
Perfect. So I'm going to just sum up. We've got a few questions again about celebrities and so on. So and how it impacts, using their name impacts things. So you've already kind of answered that. But if I just gather a few of these together, I'll put it into one question, which is, do you see any potential for celebrities or sports people to benefit from being listed on Aqua at some point in the future in any way?
Maybe on that part, yes and no. It's a bit like a double-edged sword for them, like the media. Everybody wants to be on the front page of the newspaper. If he plays good or bad, that depends on him. So yes, they want exposure, and especially when talking to influencers. This is a part we didn't touch today. We have a huge demand from certain people that say, we want an index on ourselves. Mm-hmm. And we obviously can't share revenues, but it actually increases popularity. And if an influencer grows, imagine you could have invested in PewDiePie, the esports guy who makes like, I don't know, or Ryan's Toy Review, the great kid in America who makes like, I think 15 million a year on YouTube. Imagine you can invest in them at the beginning. It helps their exposure. So we feel that the celebrity, the social media world down the road can be far more successful. And yes, it benefits their popularity. However, we are an objective reporter. We are like the deepest investigative reporter that is absolutely neutral and data-driven. And so in a nutshell, yes, it should benefit. They all should use it if they do well, but we're giving the world more transparency and democratizing big data. Now, if you've seen Palantir, which does that on terrorists and spies on people in secret, we're doing that openly. We are like the Palantir for everyone, or the Cambridge Analytica for everyone, even if it's a negative name, but we're providing data, we're making it transparent, putting it out there. And so, yes, they should be absolutely able to benefit from, and also we had discussions already with large brand ambassadors, but at the moment we feel we stay the neutral data company without getting married to someone and having an objective stance on the world.
Perfect, perfect.
Yeah.
And I think that could be a really good learning, actually, overall. If I think about, as an investor listening to this webinar, one of the big learnings is that you are a big data company. You're not actually you're not a broker. You don't necessarily want to deal with that consumer relationship, and you have the multiple associated with the big data company and scalability associated with it. So I know that for me, working with Aqua, that's been one of my big learnings. It took me a while to get my head around it and understand it, but I think it's a really key point that hopefully we've managed to communicate throughout this pitch. Okay, so one more question. What is the minimum criteria for being a celebrity listed on Aqua?
Yeah, very good question. We need so do you want to go ahead?
A bit of a demand, isn't it?
Yeah, go
I
on.
mean, it's a bit of a demand. It must be a member of the peer group. So what is a peer group? A peer group is a group of those celebrities where the audience is really listening to what they do or what they say. So there are certain football players that are well recognized in the United Arab Emirates, in England, in Germany, and worldwide. There are influencers that have a regional approach. They're providing beauty tips for Chinese ladies, and they're not necessarily famous in South America, and the other way around. So if there is an audience and the data are asked, there is a demand for them, then the brokers might decide to put them public, but they want traffic. So I think there will be a general peer group where everybody is interested in, top politicians, top leaders in the industry, celebrities from the sports, the US sports, the esports, but then I think there will, in the second and third tier, there will be regional demand. A hard criteria must meet this, that, or this, I can't give you, but they must have a certain exposure, a certain amount of followers, and public interest.
And the data points have to be sufficient in quantity.
Exactly, and a digital exposure. Thank you. Of course, a digital exposure. So probably the very successful entrepreneur who's working behind the scenes and never gives an interview, never appears publicly, never publishes anything because everything is held in double stack private partnerships. He might not be the ideal person to track with our data, but a gentleman like Mark Zuckerberg or Elon Musk in our examples who have a full digital exposure is ideal. Don't forget that today's managers have a very, very high exposure on social media. The CEO of Mercedes-Benz or Daimler-Benz is almost daily publishing an Instagram story. So they have almost as many followers as clients in Germany, which is very interesting. So what happens is you bring over your mission, and the mission is received or perceived in a different way than 10 years ago. So I think this is a process. It's a permanent process, and it might change. What we see as a celebrity today might not be 1 in 5 years, and the other way around.
If I may just add to that, we currently are making indices on around 2,000 footballers. We will go live in Q1 probably with 400 that we will actually offer to CFD brokers. So what you will see published from us will only ever be a fraction of what we are looking at and valuing, as it were.
Okay, and so I think that brings us to the end of the Q&A session. And so Yasin, maybe you can do this one. Can we have a quick sort of two-liner on what you would like investors to take away from this pitch, this Aqua pitch?
Yeah, sure. So we are basically the first company that enables you to invest in human beings, the source of every success. It's basically something as revolutionary probably as Google, because as I mentioned before, Google tells you what, who, when, where, and how, but we tell you how much. And in a world that is more and more data driven, you want to put a value to everything, and everything has a value. And especially in a world where everything is driven by media, social media, your value is your digital footprint. And it will be at some point, maybe before you meet someone, you aqua them on their business performance. And even before you go on a date, you might aqua them to see if that is a good match, because you will see the chart on somebody. And so that the core takeaways, we're creating the first new asset class since probably 20 years, which in my mind has far more relevance and meaning and importance than, for instance, Bitcoin. So as an investor, this is the ignition of something really revolutionary that can kick off to totally different spheres that we probably don't even understand as of today.